Sub-Saharan African economies have been unable to access international bond markets for almost 2 years. Last week saw a positive turnaround when Ivory successfully issued 2 Eurobonds. This raises hopes that the funding and debt crisis in sub-Saharan Africa is beginning to ease. The Ebola pandemic, the political uncertainty caused by the war in Ukraine, rising global prices, and in particular, rising interest rates in the United States and the appreciation of the US dollar have created a serious financing gap for African countries. High returns on low-risk investments became available as interest rates rose and risk in the global economy increased. At the same time, the government expenditure was on the rise as a result of the COVID-19 pandemic and the world price crisis. Simultaneously, debt servicing costs increased significantly. In a number of African countries, debt service and amortization already account for more than 50% of government revenues. In the absence of market financing, African countries have increasingly turned to the international financial institutions, the IMF and the World Bank, whose lending has increased substantially in the 2020s. Ivory Coast's Eurobond issue is a positive signal that the investment is returning to higher risk countries, easing the financing squeeze that has been in place for several years, at least for countries in a stronger economic position. For many African countries, access to financial markets and a moderation of return expectations will be crucial. A record number of Eurobond issues in 2010, take 2, a record number of Eurobonds issues in 2010 will mature between 2024 and 2032.